Hi everyone. Imagine you lend money to a friend and you are worried about whether they will pay you back or not. What if you could buy an insurance for this loan? That's basically what a credit default swap is. It's a way to protect when lending money. Today we'll break down this concept step by step in this video to understand what a credit default swap is, whether you are 10 years old or 50. Trust me, you will understand what a credit default swap is. I intend to keep it as simple and fun as possible. So, with this, let's get started and understand what exactly is a credit default swap. A credit default swap, or CDS, is like an insurance for a loan. Imagine there is a company called Alpha Corporation. A bank, say Trustee Bank, lends $10 million to Alpha Corporation. The bank is worried what if Alpha Corporation can't pay back the loan? To reduce its risk, the trustee bank goes to third party called Secure Corporation and pays a fee for credit default swap. The trustee bank pays Secure Corporation a fee that will be the insurance premium. If Alpha Corporation fails to pay the loan, then Secure Corporation steps in and pays trustee bank $10 million. If Alpha Bank doesn't default, Secure Corporation keeps the fees as the profit. Why do corporate default swaps or CDS exist? Why why would anyone create something like this? Well, there may be because of the two main reasons: risk management and investment opportunity. Banks and lenders don't want to carry all the risk of big loans. A corporate default swap spreads the risk to all the parties like secure corporation. Investment opportunity. It's not just the bank that use corporate default. Investors can buy them or sell them, betting on whether a company will default or not. It's like predicting weather, but for companies or national economies, will it rain bankruptcy or stay sunny? Quick quiz. What do you think benefits if Alpha Corporation defaults? Is it the trustee bank or secure corporation? Well, think for a minute. That's right. Trustee bank wins, but secure corporation loses big. How does it work in the real world? So there are variety of real world examples through which we can understand how does a corporate default swap work. Remember the 2008 financial crisis? The credit default swap played an important role in the 2008 financial crisis. Here, under the 2000s, the use of credit default swap skyrocketed, and the investors sought different ways to manage the risk. The market was largely unregulated, allowing for rapid growth. This period marked significant shift in how financial institutions approached credit risk, leading to both innovation and perilous consequences. American International Group (EIG) famously sold corporate default swaps without sufficient backing, leading to massive bailout during the 2008 financial crisis. This example illustrates how mismanagement of risk can lead to catastrophic results for both institutions and economy as a whole. Despite the risk, credit default swaps offer significant benefits such as risk management and enhanced liquidity in the market. They allow the investors to hedge funds against potential defaults, providing valuable tool for portfolio diversification and financial stability when used responsibly. So now you might be having certain questions regarding credit default swap. So as you go through the video, you might be having questions related to how do this credit default swap work? Can anyone buy this credit default swap? No, typically only qualified institutional investors can trade default swap. What happens if the corporate default swap seller goes bankrupt? Great question. This is called counterpart counterparty risk, and that is why choosing a reliable corporate That is why choosing a reliable corporate default swap seller is essential. But is credit default regulated? Yes, after 2008, new regulations were introduced to make credit default swaps market more transparent and safer. The dark side of credit default swaps. The complexity and the lack of transparency in the credit default swap market can lead to many systematic risks. When institutions over leverage these instruments, it creates a fragile environment. Understanding these pitfalls is essential for investors and regulators alike to prevent any future crisis. The regulatory changes that were suggested post the 2008 crisis were the Dodd-Frank Act, which was aimed to reduce systematic risk by reducing standardized contracts and central clearing, reshaping how these instruments operate today. One more example is the Greece debt crisis. Credit default swaps were extensively used to speculate on the country's default. This situation highlighted the speculative nature of credit default swap and their potential to exacerbate the financial instability as investors bet against these national economies. What is the future of credit default swaps? As we look ahead, the role of credit default swaps in financial markets will continue to evolve. Innovations such as blockchain technology may enhance transparency, efficiency, potentially transforming how credit risk is managed in the coming years. We have the technologies like zero knowledge proofs and zero knowledge startups, which are aimed at creating zero knowledge wallets that can ensure your data is secure, verified, and also is transparent at the same time. And with this, I would like to highlight how this credit risk could be used for various purposes that can be that can be related to the whole insurance or how this money system regulates, how the governments regulate the credit default swap more strictly. While CDS can be useful, they can also be dangerous if not managed properly. Think of it like a fire. You can use it to cook your own food, but it can burn your house down if you are not careful. In conclusion, I can say that credit default swap embodies the dual nature of financial instruments. They can both mitigate risk and create new vulnerabilities. Understanding their complexities is key to navigating the modern financial landscape and ensuring a stable economic future. With this, I would like to conclude and we'll take up any of these questions you have in about credit default swap. You can put down in the comments. Thank you. Thanks for joining.